Hi there, traders. This is Brad Gilbert with today's trading action. All right, now it's taken till Friday for the markets to really settle down, but they are starting to form some really good shape. And I think we're going to see a move in the dollar, another move down, right? And you look at the news, right? I mean, most of these instruments like euro stabilized, I mean, obviously the dollar index, you can see the price action here. And I purposely left the trend lines a little where they were. You can see, markets aren't really going anywhere. And dollar yen, very comfortable, just slowly moving topside again. Sterling back in the range. Aussie starting to break a little bit higher, as is the Kiwi. And dollar CAD, well, that's lower as well, right? So the commodity currencies making a bit of a comeback. A lot of pressure on them early in the week, last week, around global growth. And I mean, this is the whole story that they'll try and sell you. If it come over to the news, dollar gains after US jobless claims fall more than expected, right? This is a tier 2 number, tier 3 in the day, right? So if I just have a look at these numbers, this is where a week where there's no major fundamentals and they make up news. 233, right, versus the prior 249. Okay, the poll was 240. I mean, that's hardly a ripple in the water, right? So news, yeah, you know what? They're just making up stuff, which is fair play. If that's a job, write something. But really, the dollar hasn't done much, and I think we are going to get set for a move to the downside of the dollar, right? It's sort of, you can sort of just feel it, but all we need is one of the sort of key numbers to come out a little bit softer, and it'll be on for young and old again. So when you look at the daily charts, I mean, bit of a retrace there in the dollar index, euro back down to that sort of break level. Dollar Swiss not quite back to the levels it was before non-farm payrolls, but close. Same with dollar yen. Dollar CAD back in the range, and the other like the euro, sterling, Aussie, Kiwi, all back in the range, but ready to go should the data drop for us. So very good news going into next week. Now let's just have a look where the markets, well, what we're going to be focusing on today. Where could direction come from? Well, we do have the Chinese CPI, PPI numbers, obviously important for this whole global growth story. So Aussie, Kiwi, and potentially the CAD will be on the chopping blocks there. You come through the rest of the day, there's some consumer confidence numbers here in Switzerland. They got, I don't know, I wouldn't be sort of sitting around waiting for those, but, I was going to say if they were bizarre, then something might happen. But the real focus will be the Canadian employment numbers, okay? The employment change, 22.5K, unemployment rate 6.5. So a little bit of a blowout, but a better job number. So just roll with the numbers. I think the market will be sort of willing to sort of get into that. And this is one of those months where we don't have the clash with the non-farm payrolls, the US numbers. So it's a better opportunity across the board. And if I just scroll down, there's, a bunch of commodity data, and that's all she wrote, right? So not much to look at. If you're looking for an opportunity, keep an eye on the CAD and the CAD crosses. Let's just check the global markets and see what's going on. It was a big day for the NASDAQ. It was up like 540 points. So US equity futures up. And once again, we're not getting that uniformity across the majors. And that's what a discombobulated early start to the week does. The US treasuries, stabilizing, right? So if anything, a slightly higher on the short dated stuff. So, that does give the dollar a little bit of stability. It's not like they're going up, but the markets, after a week where there's been massive turbulence, you'll start to get some more experience around what happens after that. Everyone pulls out, right? And they let it sort of, it's either going to keep going or just drift back to where it was. And that's what we've seen across this week. And now, right, I can tell you next week, the market will have forgotten what happened last Monday and be back ready to start trading, right? And that's where you need to focus your attention. Not a bad day when you look at the markets today. Have a look across the board and start focusing on where the next major trading opportunities are. And you flick through, you got UK CPI. Anyway, there's a whole range of stuff. US CPI, for me, is the key to it. That's the number we want to see. We get any sort of slightly weakness there. And what we want, and just as a heads up on this, it's not like you want really big variance here. At this point in time, with the Reuters poll, right, the year-on-year the key number here, or actually down here, the 2.9. So you just want 0.1% lower, and then it's a nice orderly move. If we start to get really big variance in the key numbers, makes trading execution harder, and the whole getting into the trade is a little bit trickier. So what we want is just slightly weaker, no major dramas, and we'll get these instruments moving for us. All right. Now, I was just going to say today we do have the an upcoming live training session for those traders in the masterclass, setting up and managing long-term trades. Right. This training session was actually scheduled a week ago. It was almost a shame it wasn't on, because that trade alert I put out last Friday on the dollar yen turned out to be a huge opportunity. But this will set you up to understand how to manage, how to get in, how to manage a trade, and what you should be looking for a long-term trade. So join me on there. You can find the links in the training sessions there, and I'll post those on Discord. All right, guys, have a good one. All the best. If you're trading, good luck. Have a good weekend. Cheerio.